You're listening to the Rent Roll Radio Show with Sterling Chapman. Hey, Rent Roll Radios, welcome to the show. I'm your host, Sterling Chapman, and we're joined here today also with your co-host, Andrew Brough. Today we have a really special guest. He is actually the co-founder and managing partner at Four Oaks Capital. He's also the host of the Diary of an Apartment Investor, and he's an active duty Marine lieutenant colonel that currently works at the Pentagon. Really excited to have you here. Brian Briscoe, welcome to the show.
Hey, thanks a lot, Sterling. I appreciate your time. Thanks, Andrew.
So, Brian, can you go ahead and just kind of, tell us the backstory, how you got into real estate investing, what attracted you to it, how you kind of started to transition from your day life to moonlighting as a real estate investor?
Yeah. So how I got into it, I think it's very cliche, but it's that Rich Dad Poor Dad book, So, long time ago, I read Rich Dad Poor Dad, and he said buy income producing assets, and followed it up by a cash flow quadrant. And I'm like, okay, I want to be B and I don't want to be E and S, So at the time, my mindset, was not really where it needed to be. I couldn't fathom the idea of purchasing commercial real estate, and it was in his books. He does talk about commercial real estate. He talks about that being one of the best methods to build wealth. And so I did what I could and what I could actually understand. And I started buying single family houses. Active duty Marine by trade. And so every 2 to 3 years I'm moving. And so what I basically set out to do is every time I move, buy another house. Sometimes it worked, sometimes it didn't. And when I say that, sometimes when I moved, I bought something, sometimes I didn't. But anyway, over several years, had a handful of rentals. It wasn't a large portfolio by any means. 3 is the number. But I realized, a couple of years back, this is probably like 2016, still active duty Marine Corps. I'm deployed somewhere to the Middle East. I have more time in my hands than I knew what to do with. And so I started revisiting this real estate thing. I'm like, you know what? I really need to double down on this. I had compared, the $25,000, and when you get owner-occupied loans, for a single family, it's just, amazing how much money a bank will give you to buy a house.
Right.
So I looked at the $25,000 that I had between the properties put down and, what the properties were worth versus, the $100,000 or so that I had invested in retirement accounts and the stock market over the years. And the returns were just lopsided. So ended up making a whole lot more, annualized, as far as annualized returns and just dollar value, ended up making a whole lot more on the real estate investments. So I started thinking I need to be able to do this faster. I need to be able to scale. 3 houses is never going to make anybody financially free, So anyway, I started looking at other things and spreadsheeting. And what I didn't want to do is have to buy 60 single family homes, and I kind of spreadsheeted it out. And until I started paying off mortgages, it was going to take 60 homes to be able to have the passive income that I wanted. And I started scratching my head. I'm like, okay, 2 per year, that's 30 years. I'm like, that's way too long. 3 per year, that's 20 years. That's still way too long. I started, just thinking, okay, there's got to be a better way. And anyway, came across a book on multifamily. And
what book was it?
It was a Bigger Pockets book. And I should know the name of it. Everybody asked me, I should know the name. It's something like How I Bought a 24-Unit Apartment with Little or No Money Down, or something like that.
Okay. It's
got Brandon Turner on the cover with, a very small beard, not that, very long, well manicured beard he's got now. But
whenever I see that small beard pop up in my news feed, I know they're repurposing content from 2016.
And that was the year I read that book. So it may have been like a 2016 book. It was a quick read. I remember it was like, I think I paid like 99 cents for the Kindle edition, and ripped through it. And I'm like, you know what? He's on to something, and I started thinking a 24-unit apartment building, buy 1, get 23 free is what I started thinking, and then I started thinking the other thing. I'm like, okay, if I buy 24 single family homes, I have 24 roofs, 24 air conditioners, 24 of everything. I just started looking at the economies involved. If I buy a 24-unit apartment complex, they may all be under one roof. You may have 2 roofs, you may have 3 roofs, but you're not going to have 24 roofs. And I just started realizing that the difficulty does not scale with the numbers. I mean, don't get me wrong, buying a 24 unit is much more difficult than buying a single family home.
But not proportionally difficult.
Proportionally, it's not. It's not 24 times as difficult. Maybe 3 or 4 times as difficult, but, it's essentially buy one, get 23 free for Brian Briscoe math anyway. So, I got home from the deployment and I just kept on learning. I crushed the podcast trail. I think my staples, a couple of years ago, Joe Fairless. I mean,
oh yeah,
he releases an episode every day, so there's always something new. Michael Blanc, Rod Cleef. I started just listening to everything they put out.
And congratulations! I saw you were on the Rod Cleef show the other day.
Yeah. So, I was absolutely shocked that he asked me. I didn't reach out to him. His assistant reached out to me, and it was just like, wow. And speaking of, I record with Joe Fairless in a couple of weeks too. And, his assistant asked me too. So, it's something where I've got enough traction where it's just amazing.
It's snowballing at this point. I was on Joe's show too, but I had to beg them to let me on. They didn't come find me. So you're obviously a much bigger deal.
If you would have told me 2 years ago, I didn't have any expectations of being on. I mean, once upon a time, I'm like, eventually I want to be on their show, So yeah, I mean, for me, it's an honor, and just spending an hour on the line with Rod Cleef was absolutely amazing. I was on the Michael Blanc podcast, 8 months ago as well. And, could say the same thing about that. That was an absolute honor. So anyway, thanks. So yeah, their podcast, their content, really kind of kept the fire burning, so to speak, kept it at the forefront of my mind. Every day I was, driving or riding home from work, I was listening to podcasts. I was at the gym listening to podcasts or audiobooks. Every free minute I had, I was either reading or listening, consuming content on multifamily. Started touring, a bunch of homes, and I realized really quickly that just listening to podcasts is not enough. Just hearing other people's stories isn't enough. And I remember looking at a couple of apartment buildings one day in Idaho Falls. That's where my in-laws live. And I remember walking out of one of these and just scratching my head thinking, how do I know if this is a good deal? I mean, there's a price tag on it, what they're asking, it was a 6 unit, it was listed on, MLS, and so yeah, there was a price on it, and I'm scratching my head. I'm just like, yeah, I've walked through it. I've seen some of the units, and I had no idea, was the answer. I'm like, so, within 24 hours, I basically bought into an education program, so dropped a couple $1,000s for just a to Z. Here's how you buy an apartment building. So, once again, just started, ripping through that content, learning as fast as I could. And then what I decided to do is just turn around and try to share it as fast as I could, so I was involved in a lot of forums, a couple, Facebook groups, one of the forums that, Michael Blanc hosts, and just tried to answer everybody's questions, so. And I'll be honest, at the first, when somebody would ask a question about multifamily, there were times that I'd go back to the course, open up, module number 2 and be like, there's the answer to that question, go back to the forum and, hey, this is how you do that. But, that was actually crucial in, and why I bring that up, it was one of the keys that it has gotten to me to where I am right now, because one of the things that you told me previously that you want to talk about is team building. You have to put yourself out there. You have to be a good teammate to be able to attract other good teammates, and the fact that I was on all these forums, putting information out there, answering questions, doing the best I could to add value to other people who were looking to do this. That's literally how I assembled my team and how I met the people that I'm currently partnered with. So anyway, long story short, I met a guy named Eric Shirley through one of these forums. We found out that we were actually chasing the same deals. So, he suggested that we try to tackle one of them jointly. And so I said, yeah, no problem. Would love to try to do that. I was very aware that I needed partners at the time, and I was looking for partners. And so when he, extended the olive leaf, it was just a real quick, yeah, absolutely. Let's try this out. So, just give you wave tops and let you, dial in deeper wherever you want. Ended up getting a 55 unit under contract. This was about just over a year and a half ago. Got a 55 unit under contract. We were able to raise, a bunch of money for it. Closed on that deal. Since then, we've closed on several more. But basically, getting that first deal across the finish line, we looked left and right, and said, well, who else do we need to come into this deal to be able to close it? And by the time the dust settled, there were 4 of us, and we started working with each other, calling each other on a weekly basis or, several times a week in some cases. We realized that we worked together well. We liked each other. Our interests aligned, our goals aligned. I mean, it was like a match made in heaven, So end of the day, we decided to create Four Oaks Capital and basically be exclusive to each other as far as, the apartment investing business. And right now, we have 4 apartment buildings. We're about ready to close on number 5. It's end of September right now. By week 1 or week 2 of October, we should have that closed and under management. So long story, a lot of wave tops on this one, but I'll let you.
Yeah, absolutely. And like I was telling you beforehand, the reason a lot of times my friends and family and people who don't listen to the show are curious as to why I do a podcast. I'm not selling anything. I literally just take this as an opportunity to invite people that I really respect and want to learn from and ask them questions. And I just share it because like you, I learned everything I know about real estate from podcasts. So if I'm going to be calling, begging for your wisdom, then it's only right that I would share it with the world as I'm getting it. And when I thought about you and our previous interactions and the content that you put out and the successes I've seen you had, the questions that came to my mind were about balance and team building. Because you have Four Oaks Capital, which is obviously there's 4 of you. And I would imagine that there's probably a story there of some of you had, different strengths versus, that supported your weaknesses. I imagine that all 4 of you don't have the exact same strengths and the exact same weaknesses. So I wanted you to elaborate a little bit more about how you built that team out and why you built that team out. And then I would imagine that is very closely related to the other topic of balance. You're an active military. You work insane schedules. I know that because we've tried to run deals across your desk before, and you're like, all right, well, I'll be at work for the next 24 hours, and then I'll call you tomorrow night.
Yeah.
And you're a family man and all this other stuff. So how do you do it? I find myself running in circles trying to balance the podcast and the day job and the real estate investing, and you just seem to be killing it. So I'd love some feedback on that.
Lots of energy drinks, I guess, if you had to boil it down to one thing, I buy, lots of Monster energy drinks, but, so yeah, building the team, is really, I think the thing that's been absolutely crucial for me, so my work schedule has, kind of ebbed and flowed a lot, right now it's actually a lot more reasonable than it was a couple months ago, but just kind of going through the process, a year and a half ago, I had a fairly flexible schedule at work. I had to go to the Pentagon every day. And, we have what are called secure areas there, which means you can't bring electronics inside. It's all about preventing information getting out, the wrong information getting into the wrong people's hands. So I walk into the Pentagon, I put my phone in a lockbox and, I sit at my desk and, kind of shut off from the outside world. So basically what I had to do as far as timing is just be very deliberate with what I did, so I kind of sat back and said, I need to dedicate time to this. All right. Looked at my schedule and I tried to find the white spaces. I realized that I sat down on the metro on a train at about 6:30 every morning, and I got to my office at about 7:40 every morning. So I had about an hour, when I wasn't either standing on a platform waiting for a train or walking from the station to the Pentagon. I had about an hour every morning and an hour every evening where I was sitting on a train. So I bought an iPad, and I can take an iPad on a train a lot easier than I can take a laptop. So there were 2 hours a day right there that I could dedicate to whatever was the most important thing at the time. But, I made sure I had a list of things that, I would go over, and I would actually plan the time on the metro. So anyway, that's one thing that I carved out time. And then inside the Pentagon, in the Marine Corps, physical fitness is very highly valued. So they give you time during your workday to go work out, So, if I'm sitting at my desk and I stand up and say, hey, everybody, I'm going to the gym, nobody bats an eye. They're like, all right, cool. Maybe I'll see you down there type stuff. But I would go down and for my warm up, I'd sit on an exercise bike, pedal really slowly with my phone in hand and tap out emails. I just ended up being really, really deliberate about my time, So during the workday, if I needed to talk to somebody, I'd schedule a call. I'd put it on my calendar and I just, make a note. Okay, I need to step outside of the Pentagon for, at 10 o'clock because I have a call with Andrew, and I have taken calls from Andrew from the Pentagon. But that's basically what I had to do as far as time. And then I'd get home, 6 o'clock at night, spend an hour or 2 or 3, with family. And then very consistently from 9 o'clock to about 11 every night, I was looking at spreadsheets, tapping out emails again, this time on my laptop. So the balance came in just, looking at the white space you have, So what did I give up? I gave up Netflix, I gave up, the stupid little games, the Candy Crushes, the stupid little games on your phone that you play. And all that stuff came to a full stop. So, my personal entertainment, if I wasn't sitting with a kid on a couch, I wasn't watching TV anymore. So that's basically originally how I found the time. The other part of your question was about the team building. We have different roles and responsibilities. We complement each other well. There's 3 things you need to do well. You need to be able to find deals, you need to be able to find money, and you need to be able to manage your assets once you own them. So shortly after we came together as Four Oaks Capital, before we came together as Four Oaks Capital, I was trying to do everything. And I knew I needed a partner. But once again, since I didn't have one, I was just trying to do everything. I was trying to, raise money. I was trying to find the deals. I was underwriting the deals. I was talking to potential investors. I was talking to the broker, to the attorney, to everybody. So finding the partners was a lot of help because we sat down, we looked at everybody's strengths and weaknesses. I'm really good at analyzing deals. I've got 2 degrees in math, so numbers work well for me. But because of the timeline that I was on, where I can't take calls in the middle of the day, we decided that Eric would be our acquisitions guy. So he'd be calling the brokers, talking to the brokers, getting the deals, underwriting the deals. And basically when it came time to where he's like, I want to put an LOI on this one, then he'd share it with the rest of the group. We'd all look over it, do our own analysis on it, and then, thumbs up, thumbs down. So really leveraging the partnerships has been absolutely crucial, and after we got the first deal, I assumed the role of asset management, because I was the one that found this deal. I was the lead on the underwriting. I knew this deal better than all of my partners. And so it was just natural for me to be the asset manager, natural for Eric to take on the role of acquisitions after that.
So what does the role of asset manager entail?
So asset manager, we have a property manager who's running the day-to-day. He or she's doing the lease activity. They're doing the showings. They're doing all the day-to-day stuff. The asset management is basically managing your managers. So we had, a renovation plan. So would forecast what was going on, but essentially think of the puppet type, pulling the strings from the property manager to say, okay, next thing I need you guys to do is X or Y or Z. Okay, let's start looking at the parking lot to get that, redone. Yeah. Let's do the windows. Let's do that. So it's just the executing the business plan on the asset is essentially what it is. But my schedule changed. COVID came and there's a lot of different, groups in the Pentagon that just popped up to deal with the COVID crisis that we had. And I got sucked into one of those, so, and that's the point where you said where I was in the Pentagon a lot. I was working, 12-hour shifts, basically, I'd leave my house at 5 a.m, get home 7 p.m. If I was lucky, get, 6 hours of sleep, get back up and go do it all over again. So when I started doing that, we had a team call and it was basically, hey, I can't carve out time to talk to the property manager, every Monday afternoon like we have been. So we flexed, so we just kind of changed roles, and that's where, we've basically been in the same roles, since that. So the team is important, and it's important that you have good people, to your left and to your right. And, I was fortunate to find some really good people. So, now asset management is handled by somebody else. All the things that I was doing. And, right now, my main focus, I'm basically the director of marketing right now. So I'm doing a lot of the social media outreach, getting on podcasts, whenever I can to get our message out, running our own podcast, which, has kind of been a labor of love for me. So kind of transitioned. And then I think the other big thing that I'm now working on is, we're working on an educational platform. Okay. We've promised a lot of people education through investment. And the bulk of my time right now is spent on building that up to where we can basically follow through on our promises,
So elaborate on that. You say you promised a lot of people education through investment. Basically, you're passive investors saying, hey, I'll invest with you, but I want to learn the process along the way.
Yeah, exactly. We may have been late on fulfilling the promise, but, we're absolutely going to do it. So we've had a couple of, of deals, we've, like I said, 4 under our belt right now. So I'm just creating content, kind of a how-to guide. It'll have, we're going to have like due diligence checklists. We're going to have, a lot of the documents that people need to start syndicating. We're going to start, weekly group calls, maybe a group mentorship type thing as well. But, right now that's my baby, my contribution. And, because of my weird and crazy hours and many commitments, that's something I can do basically anytime during the day, so sure. Yeah, if I'm in the Pentagon and I can't, be consistently on calls with brokers, I can schedule podcasts around my schedule. I can write content, around my own schedule. So that's how we've shifted since. And then, I've got, about 316 days until I can retire and start doing this full time.
Awesome. My next question is, first of all, how long between when you decided you wanted to invest in larger multifamily properties and when you actually secured your first deal? And what do you think the tipping point was? I mean, you said it in the past about, the podcasts weren't enough, the education wasn't enough. I always like Brandon Turner's comment about if education was the answer, we'd all be billionaires with 6-pack abs. What was it that pushed you over the edge to actually close on that first large deal?
So you say how long? I mean, there are varying levels of commitment all along the way, So somewhere on the deployment, it was like, I'm going to do apartments, Yeah. And I started telling people I'm going to get into apartments, but there wasn't any action behind that. It was just, continual learning. And I kept on telling people that I was going to do apartments, and I'm sure some of them are like, yeah, right, sure, whatever, But, I think paying for the courses actually made me commit a little bit more, so opening up my wallet and pulling out $2,000 for an online course. I mean, $2,000 in the grand scheme of things is not a lot, right? But it's enough where you stop and think, you're like, okay, do I really want to do this? Am I really committed? And I'm like, yeah, I want to do this. Yes, I'm committed, so click the button, did it all online, pull out my credit card, wrote the numbers in, and, that was like the first commitment step. And then a couple months later, I'm like, this is all good information. I have enough to be able to do it. But man, it sure would be nice to have somebody looking over my shoulder. And opened up my wallet again, and I decided to pay for coaching. I would say that commitment was the most significant one because, $2,000, if I lost $2,000, I'd recover really quickly. Now, I'm fortunately in a position right now where, $2,000 doesn't affect much. The coaching course that I got into was $25,000. And that's a little more of a commitment. And I don't know, there's something mental about making that big purchase where you really have to commit. It's a big purchase, so you really have to commit. But from the time that happened to our first deal was 6 months, and that's under contract, and it was less than a year to close. So yeah, as far as your question, I would say that I had varying levels of commitment, and it was just all ramping up. And at each step, I tried to commit myself a little bit further and make it more irreversible in a lot of ways.
What other motivations did you have to do this?
It's funny. I mentioned I have 317 days. I don't know exactly what the countdown is today. Hopefully I didn't, give a different number 2 minutes ago, but somewhere between 315 and 320 days is what I have till retirement, right? I started a countdown And that was my motivation, because I'm going to step away from a fairly high paying salary. Now, active duty military, we get a pension, but it's going to amount to about 1/3 of my current pay. So I'm making this much right now, and that number is going to get cut very significantly in about 317 days, right? So I started the countdown and kept that countdown on the forefront of my mind, because that's when my salary is going to run out. And that's when the apartment business is going to have to pay for the Briscoe family living expenses. So that's one thing I've done to keep it in the forefront of my mind. Also on the Metro, the first thing I did every morning was open up my notebook, and I had my goals right there. A lot of goals, and I'd review them. And the first one of them was talking about replacing my annual income through multifamily investing. And so, yeah, just keeping the goal at the forefront of my mind, and telling everybody about it too. So people will a lot of times chuckle when I say, I've got 317 days till I retire. But that's so that I keep focused on what my goals actually are.
So what advice would you tell yourself if you could talk to yourself at the beginning of this journey? Is there anything you would have done different along the way?
I think I did the best I could with the information I had in front of me. If I could go back and talk to my previous self, it would have been at the time that I read Rich Dad, Poor Dad, and I would have told myself, you can do multifamily. You can do it. There's ways to do it. I immediately dismissed it because it seemed like it was too complicated or not accessible to somebody, as simple as I am, or I was. I guess I'm still fairly simple, but that's really all it was. I had a really big limiting belief 17 or 18 or so years ago that kept me from doing what I'm doing now, because I didn't think that somebody like me would be able to do apartment investing.
Absolutely.
So
what was it that held you back the most? You talk about limiting beliefs. Mm-hmm. Was it raising the capital? Was it interacting with the brokers, finding the deals? What was your mental challenge? Obviously, it wasn't a real challenge because you've successfully completed it now, but what was your biggest limiting belief around multifamily?
The first one was, like I said, just that I couldn't do it, that it was too complicated to go commercial. But once I decided commercial, I kind of thought that nobody would take me seriously until I had a lot of experience, and I started thinking, okay, how do I get experience? And I thought the only way that I could get experience was to go alone, find something, purchase it, a 6 unit or an 8 unit or a 10 unit, build my own credibility on my own before people would invest with me. And that's what I started doing. Unfortunately, about 2 years ago at a local meetup, a guy that I met, he's a retired Air Force guy, literally put his hand on my shoulder and said, dude, you can do this. And he pointed to everybody else in the room. He's like, look around here. You got a bunch of just average people in here. And a lot of these guys are doing what you want to do. He's like, you can do it. You can go bigger than these little 6 or 8 units. He's like, go for something big. And that was one of those moments that just kind of opened my mind, and I had talked to a lot of people in that room, and he was right. There were a bunch of very average people in there, and some of those guys had, 2,000, 3,000 units. So it was just like, he's not any smarter than I am. I can outwork him. I can out-hustle him. I can probably outlearn him too. So yeah, that was the other big thing, was realizing that I could actually go big. And I could bring other people onto the team with me.
So what was your first raise, and did you have any challenges with that? Was there any point you were afraid you weren't going to be able to get it together? Or?
Our first raise, we thought it was going to be 1.4 million, and we had 1.4 million committed. And basically our lender interest rates, this was about this time last year, our interest rate went from high 3s to low 5s in a 3-day period. It was all artificial, Fannie Mae hitting their, annually federal limit, So when they got close to their federal limit and the feds were not budging on what they could lend, they artificially hiked up their interest rates. So long story short, we thought we were going to have to raise 1.4 million, but the bank basically cut our proceeds by a significant amount. So if it wasn't for that, that raise would have been really smooth. But we went from, being fully funded to a week later being like, oh my gosh, can we close? So, I mean, we had to sit down and really look at the deal backwards and forwards and make sure, I's were dotted, T's were crossed. But what we ended up doing is changing the investor ownership shares. So to make it work, we had to raise more money, which dilutes the pot, which decreases the projected returns. So what we did is, instead of giving our investors a 75% ownership, we moved the needle to 90%. So every investor in that deal has a 90% ownership, so that we could give them basically the same return. End of the day, it ended up being extremely stressful. We had enough money in the bank at closing to close, and we continued to raise money for a couple months after the deal to get our renovation budget intact. So artificially, it ended up being a lot harder than it had to be. Timing was just what it was. So ended up going from a $1.4 million raise to a $2 million raise.
Tell us about your mentor in your coaching program. Are they continuing to provide value now, or are they?
I've got a phone call with my mentor on Monday. I mean, it's so we keep in touch. I have kind of two unofficial mentors in that program, and between the four of us, we were involved in 3 different mentoring programs. So we have like 3 different mentors that kind of guided us through that first process, and at a lot of the choke points. And when our proceeds got cut, we literally had all of our mentors on a Zoom call with us. There's the 4 of us in 4 Oaks and a bunch of other, 3 other guys on the call that all have a lot more experience, and we were just brainstorming ideas.
How was that? Were they like button heads, or
No.
Was there any disagreement between them?
No, it was awesome. They were all in it for us. They all wanted us to succeed, and they all wanted us to be able to, make the right decision. And every single one of them was saying the same thing. They're like, look, if the deal doesn't make sense, you need to take your losses, cut and run. But our goal was, let's see if we can get to yes on this one, so, and the real, the answer that ended up doing it was, moving from that 75-25 to 90-10. Once we moved from 75-25 to 90-10, the numbers all of a sudden were back into green. So, but yeah, there were a lot of ideas thrown out there. It was just, hey, have you guys tried this yet? Have you guys tried this yet? And there was no egos on it. It was just all trying to help, the 4 Oaks guys out and get it across the finish line. But yeah, so that the mentorship was extremely helpful. I would say it was like an accelerant is all it is, so I'm confident that I would have been successful without mentorship. But would I be, sitting as a co-founder of a company that, owns almost $9 million in assets right now? Probably not. We're going to close on another $3.5 million in assets with, a $1 million renovation budget. So, a month from now, that number is going to be about 12 million. So I wouldn't be where I'm at right now. I would probably be the guy that has a 6-plex and an 8-plex and, maybe a 12-plex. You know what I'm saying? So I would have been successful. This just allowed me to be faster at getting to where I wanted to go, and potentially with fewer mistakes.
So tell us about your podcast.
The podcast is kind of a labor of love for me. It's called Diary of an Apartment Investor. And the mentorship part, I enjoy teaching people. I enjoy talking to people about business and helping people along. And that's how we designed the podcast. So every episode, well, we have 2 types of episodes. So I'm talking about our Ask the Expert episodes. I bring on an aspiring investor and an experienced investor on each one of these episodes, so just like most podcasts, the experienced guest, gives his story or her story and tells us what they're doing. And about halfway through the podcast episode, we transition to the aspiring investor, and she or he will tell us what they're doing. And at one point I just say, hey, we have so-and-so on the line here. He's experienced. What do you want to ask him? And it's question answer, so with the aspiring investors, I have them write a list of questions that they want prior to coming on the show. I try to match them with the right person, so So if it's somebody who needs help raising capital, I'll try to match them up with somebody who's really good at raising capital. So the idea is just to help aspiring investors. And I think a lot of aspiring investors are getting a lot of value out of it. So yeah, that's the podcast. It's done phenomenally, compared to a lot of other podcasts with the same, amount of time. And it's honestly the multifamily podcasting market. It's a very niche market. It's not like, Joe Rogan, who appeals to everybody anyway. So yeah, that's the podcast.
Awesome. So real quick, just to hop into our radio round to let our listeners get to know you a little bit better. What's your favorite book?
Favorite book? Andrew's going to like this one. The Book of Mormon is the answer to that one. Yeah.
Yes.
That is my favorite book.
Awesome.
Yeah.
Great book.
So what's your favorite quote?
Will Rogers once said, "Don't wait to buy real estate. Buy real estate and wait." So I think it just gives you a really good, that's just how real estate works. It appreciates in value over time. So, instead of waiting, you buy it, you hold it, and boom, make a fortune.
Awesome. And what's your favorite thing to do outside of work?
Is there outside of work? No,
I was wondering the same thing.
Yeah, my family. I try to do as much as I can with the kids. But right now it's like I have two full-time jobs. But on a daily basis, I try to sit down with my kids and just do something with them. Whether it's watch a video with them on YouTube. Put an Xbox controller in my hand and play something on Xbox. I try to spend a little bit of time with each one of my kids every day.
Awesome. So Brian, you're the marketing guy for Four Oaks Capital. So tell us, how can we find out more about you and Four Oaks? You've already told us about your podcast. Yep. Where else can we get in touch with you guys and learn more about you?
So fouroakscapital.com is the website, and our podcast is actually on that website as well. It's fouroakscapital.com/podcast, pretty easy. That's the best place to learn about us. I'm also most active on LinkedIn. I probably post 5, 8, 10 times a week on LinkedIn and interact with a lot of people there. Also have a monthly networking group, third Monday of every month. Usually are posting information on that on LinkedIn and Facebook, and a weekly meetup that I run as well every Friday. Same thing. Look for me on LinkedIn if you're interested in any of that.
Awesome. Brian, thank you so much for joining us. I learned a ton, like I knew I would, and I'm sure our listeners will as well. I really appreciate it, and we'll definitely be following your journey.
Awesome. Hey, thanks a lot. I appreciate you guys' time.
Thanks for tuning in to the Rent Roll Radio Show, brought to you by Crestworth Capital. We hope you enjoyed the show, and if you did, please hit the subscribe button and leave us a rating and review. You can also visit us at crestworthcapital.com or rentrollradio.com, or follow us on Facebook at Rent Roll Radio or at Crestworth Capital. If you would like to reach us, feel free to shoot us an email at info@rentrollradio.com or sterling@crestworthcapital.com. We hope you come back next week to join us on some more of our journey. Until then, happy investing.